analyst with TradeCaptain.com. Sorry to keep you waiting. What we're gonna do now is we're gonna take a look at the main markets as we should do here in the live trading room at this time of the day. Before we start though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a general risk that we'll lose all of our invested money. So please bear that in mind before you start trading. Okay, guys, let's begin, and we'll begin with the euro. So the euro, obviously under pressure, and I was bullish. So I'm trading above this low here, 122.02.05, and the market slipped below that. There's absolutely nothing we can do about that. Got stopped out, and then the market has been trying to move to the downside. Now, as I said yesterday, and I said that over the last few years as well, it's very important not to, it's important not to actually look for breakouts in the late London session or in the evening, just late. What's late then? Well, usually after 3 p.m., 4 p.m. London time, that will be 4 p.m. GMT, then most breakouts tends to be false. In fact, at 3 p.m. GMT, you tend to see the high or the low of the day depending on the trade, on the trend, sorry. So with that in mind, even if we want to short down here at 21.19 or so, try to go to the downside, it's unlikely that we're gonna have. I mean, if I would have short here, I would have just closed that out and then look again at this low here, and the new low is 21.82. So obviously, if we take out that level today, like right now, it's trying, then that could be most likely further decline. I mean, you can just see it here, different ways of looking at it, but the market is down with, it's pretty much unchanged today. It's like a change of like 6 pip, right? So you can't say it's oversold from this metric, right? It's neutral. So the break here could potentially opening up for decline to the downside. Now there are risks involved with this, and one risk is the fact that the last high is up here at 123.62. So traders that are trading this are probably going to say to themselves, okay, if it breaks the 82 level, I want to see it to go down quickly, maybe to 21.50, and then maybe it'll bounce back up again and then down, because that means that they maybe could put a stop loss at 22.52. But the initial stop loss on short here is this level up here. Now, if you're not looking to do that, I'm personally neutral as long as you trade within this range. But I do know, traders that want to sell, and I think these guys are probably looking with this as a stop level, and then they're looking for this to bounce up, maybe to first fib or something like that. So 122.42, maybe 122.80, and then looking to sell here with stops on the other side. So that's the alternative. Personally, again, I am neutral here between these two levels. Okay, is Bitcoin. Bitcoin is a bit boring, to be honest. Not much is happening. We have this big head and shoulders pattern here that could develop into something, and for that we need a break to this high here, which is 11,768. In the short term as well, the market is trapped between 91.85 and 11,069. So obviously, if we take out this level, market might try to attack this high, so it goes up and then it goes down, and then we'll see if it wants to continue to go down or if it goes and take this level. Now, boring, you might say, well, that's not fun. That's right, it is usually no fun. But when you have boring in the market and then suddenly volatility tends to pick up, then you tend to have a lot of fun. So with that, I mean that the longer it actually consolidates, it would even be better if consolidated for even longer here, like at 2-3 weeks more, because then when we have either break to the upside here, we can have a massive move. The alternatives to break the downside, and we'll probably revisit the February low. So there's nothing bad with a bit of consolidation, so I don't see that as anything bad. For now though, I'm more or less neutral. I am personally probably looking to get engaged up here, unless I start to look at Ethereum, Ripple, all of the other coins, and I see some nice breaks there, right? Because all of these coins are highly correlated. So when you start to see they're buying, all the other major coins, you start to see breaks in those markets as well, then that tends to translate into a good signal that it's time to get involved, either on the buy side or the sell side. But for now, trading sideways, so there's not much to do. Watch 91.85 and 11,069. Crude oil moved down. Stock markets moved down in general yesterday under a bit of panic. Market declined. Overall, with the trend is bullish of 60.69, which is the level down here. So hopefully it's just gonna bottom out here. If it doesn't, then there's not too much to do. Then it will take out the low here. It could potentially target 58.16, which is this level down here from February 14th. Here's gold. The euro is going lower, right? The pound is going lower. Aussie dollar is going lower. New Zealand dollar is holding up slightly. So here, I think we could have. I would be surprised. I'm actually surprised that gold is holding up the way it is. Now, the way trading works, sometimes you can use all these confirmations from the market to get out of positions, but technically here we can't do nothing right now because above 1,306 the trend is bullish. However, take that out and suddenly it becomes a bearish market because we stop creating these higher and higher lows. So here, if we take out the low, traders are probably going to sell a bit for it to go down, and then most likely stops just here at this level, which is the 1,323 level. So you're looking at a risk of about 1.27%, and if it goes down to maybe lowest down here, then you're dealing with potential return of 2.85%. And the same level here as well is the one that's going to end this little downtrend most likely. So in the short term, of course, we're dealing with this little downtrend here. But if we take out this level, the bearish momentum is probably going to go away and probably target this high and then higher. Here's the DAX. So the markets, the S&P in particular, obviously declined quite a bit yesterday, and German DAX and FTSE 100 in general have underperformed. So when the FTSE S&P 500 declined yesterday, we just seen even a worse development here in the DAX and in the FTSE 100. And the market is coming down here to the entry of this first position, and if we touch that, there's not too much to do. If we take out these two lows, just turn neutral following that. But if we don't, if we bounce, then obviously we could potentially head up to this high here and maybe even higher. And if it takes out the low here as well, I think at that point as well, it's probably better just to ignore this market for a few days, because it's probably going to continue to chop around here, and it's just going to be a difficult market to trade. And that, guys, concludes today's market update. I want to thank you so much for joining me, and I hope you have a good day. And don't forget to join me here at 9 AM London time, Monday to Friday. I'm usually here. If I'm not, I'm going to leave a little message that I'm away. So you just need to remember to come to the live trading room to join us here. The alternative is that you subscribe to our YouTube channel and you click on that little bell button, and when I go live, you're going to get a little notification that I'm live. As well, you get notifications of other videos as well. Don't forget to follow us on the mobile app. So we have a mobile app. It's actually not so much about following. It's just a very cool mobile app that we developed. So it looks like this, where you, in essence, get a notification when any new articles have been uploaded. So you have all the technical analysis, all the news. You can see which webinars we have, educational videos. You can even access the premium educational content. You even have the economic calendar. We're working on, you can subscribe already as well, so you get a notification, say non-farm payrolls, and then it pops out and tells you, about non-farm payrolls. But we're working on that specific function to make it even better. It's free to download. Check it out. It's available on the App Store, but also available on Google Play. Have a good day, guys, and I'll see you guys tomorrow at 9 AM here in the live trading room. Thanks.